Good evening, everyone. Welcome back to another Patron live sharing class. It's my honor to able to host everyone here. As a gentle reminder to everyone, please remember to apply the knowledge you guys have learned in my class and put it into practice. Continuous learning and practice will definitely improve your trading skills, which will eventually lead to more profitable trades. Our ultimate goal here is financial freedom. So let's work hard together to achieve it. We are all here to learn something new and advance our portfolio. As for today, we will share one new topic. It's called candlestick pattern. It is one of the basic of trading that most of us have to learn. By sharing all this content with all of you is something that I believe is useful and important for most of my members. This technique will be able to help everyone here to have a clear understanding on how to read the charts, and by understanding the charts well, it will definitely help you or to earn more profits and avoid unnecessary losses. Besides sharing trading techniques, I also will scan for more profitable high quality stocks, share market analysis, and guide everyone in all aspects of trading. So I hope that everyone can be more knowledgeable and profitable. Thank you everyone for your support. Okay friends, let's take a look at today's content. Same, we have 4 topics to go over. To start off, let's move on to market analysis. Okay, let's take a look at today's market trends. In fact, the market trend in the past few trading days have been quite unexpected. Despite the general downturn in foreign markets, the performance of the Indian stock market today is relatively strong, in my personal opinion. At least for today, despite the slight dip at the closing, is still okay. Okay, let's take a look at the Nifty index. Okay, our India stock market has indeed performed unexpectedly well, despite the overnight plunge on Wall Street and the morning downturn in Asia's stock market. Our stock index opened higher today. The midterm budget lower than expected infrastructure spending has slightly disappointed the domestic market. However, the government's commitment to fiscal prudence, aiming for a 5.1 fiscal deficit target for the 2025 fiscal year, is expected to improve the economic rating outlook. Although the index closed in the red today, the trend was not particularly weak. It exhibits a typical intra-volatile trend. As we have mentioned before, the current market is expected to fluctuate at high levels for a while. This is partly due to the Federal Reserve decision to maintain interest rate without clear indications of future rate cuts, which is likely to dampen market sentiments. Furthermore, the lower than expected infrastructure spending in the midterm budget has slightly disappointed the domestic market. Therefore, the market still lacks directional guidance at the moment. Technically, after the Nifty index broke above the short-term downward trend on the 29th of last month, the price has been mainly oscillating sideways in the past few trading days. The upper resistance is near 21,800 and the lower support is around 21,450. It has not yet broken out of this range, which is only a short-term oscillation range and relatively narrow. We have been consistently emphasizing that the current market is exhibiting a typical volatile trend with no sustained upward or downward movement, and any short-term direction changes can occur at any time without any regularity. We have also been advising against buying any ordinary stock recently, because even you buy, there may not be much profit, and in a volatile market there is a greater risk of incurring more losses. And of course, the above opinions are only for your reference. Okay, that's all for Nifty. Let's move on to Sensex. Let's take a look at Sensex index. Okay, as for the Sensex index, okay, as I have repeatedly mentioned, the Sensex index chart generally doesn't differ significantly from the Nifty index chart. Today, we will continue to analyze the Sensex index from a different perspective. And of course, the analyst result for Sensex also apply to the Nifty index. Currently, from Sensex index chart, it can be observed that after a price broke through the short-term average price line, the market has been oscillating within a small range from the past 3 trading days. When it falls too much and when it rises too high, it starts to fall. It is anticipated that the Sensex index will not experience significant changes in the next trading day. After several days of rebound, the MA10 has gradually flattened out from its previous downward trend, and the current price is below the MA10, not to mention the larger parameter moving average. The price is above the average line, theoretically indicating strength, but in reality, there is no clear trend or strong upward momentum. As for the MACD index, at the daily level, shows the fast and slow lines converging further, but it is far from the time for a bullish crossover. Even if the MACD fast and slow line do cross, the upward momentum they represent is likely to be relatively weak. This is because the current indicator adjustment is not sufficient. In this oscillating market trend, it is certainly difficult for ordinary trading to achieve profits. However, our trading is not affected at all. Whether it's trading in the UC limit stocks, block trades, or applying for IPOs, we have made substantial profits. And in addition, on the last trading day, we conduct block trade as usual. And as of this morning, our members and friends have basically made a profit of 12%. And for tomorrow, we will introduce the second block trading stock. Those who wish to participate in trading can make an appointment with my assistant, because due to limited quotas. Okay, so that's all for the 2 indexes. Let's take a look at the next topic. Okay, we'll continue to pay attention to the macroeconomical data and news. Okay, the latest interest rate decision by the Federal Reserve has been announced, and there are currently no further plans to cut interest rates, causing market volatility. This volatility is likely to continue in the short term. At this time, we need to other economic data to help us further analyze the market. And at the same time, macroeconomic data and information can not only allow us to examine the market from a broader perspective, but also help us validate and judge the market trends. This is particularly important as the current market is in a phase of volatile adjustment, and we need to conduct comprehensive analysis from multiple aspects. Okay, let's take a look at the news that I choose to share with everyone. Okay, nominal GDP growth of 10.5%. According to Money Control Survey involving 15 economies, next year nominal GDP growth is expected to align with the assumption in the 2023 and 2024 federal budget. However, it exceeds the 8.9% estimate provided by the Ministry of Statistics for the same period. Nominal GDP growth represents the country's GDP without taking inflation into account, playing a crucial role in determining various aspects of the budget. It forms the basis of calculating indicators such as a fiscal deficit as a percentage of GDP. The assumption of a higher nominal GDP growth rate by the Minister of Finance would mean a higher absolute GDP value, thereby reducing the ratio of fiscal deficit to GDP. India Ratings and Research pointed out, due to expenditure rigidity, India's fiscal consolidation is primarily revenue driven. Therefore, economic growth has a significant impact on tax collection, which in turn has a major impact on the fiscal consolidation. However, economists anticipated that wholesale inflation will significantly affect nominal GDP growth and will continue to rise. Therefore, the nominal GDP growth rate for 2024 to 2025 is expected to be higher than the one 2023 to 2024. According to the Ministry of Statistics, initial estimate of the national income for 2023 to 2024, India's nominal GDP is expected to grow by 8.9% this year, reaching 2,965.8 billion rupees. The 2023 to 2024 budget assumed nominal GDP will grow to 3,017.5 billion rupees. So the Indian government plans to reduce the fiscal deficit to 4.5% of GDP by 2025 to 2026. Okay? So this is about more on the GDP, nominal growth or GDP for these few years. Okay, let's take a look at the next news that I would like to share with everyone. Okay, this is about Federal Reserve about interest rate. Okay, recently the long-awaited Federal Reserve interest rate decision finally came out on Wednesday night. The Federal Reserve on Wednesday kept interest rate unchanged, but took an important step towards lowering rates in the coming months in a policy statement that eased concerns about inflation and other economical risks, and abandoned the notion of further rate cuts for the time being. The latest policy statement from the Federal Reserve did not signal an imminent rate cuts. In fact, the Federal Open Market Committee expects that it will be appropriate to maintain the current target range until labor market conditions have reached levels consistent with the committee assessment of a maximum employment and inflation has risen to 2% and is on track to moderately exceed 2% for some time. In a statement released after 2 days of meeting, the Federal Reserve said inflation has moderated over the past year, but it remained elevated, and repeated that officials remain highly attentive to inflation risks. Federal Reserve Chairman Jerome Powell warned in his remarks at the press conference following the Federal Open Market Committee meeting that the Fed struggle to lower inflation is not over, stating, "We have not declared victory. We believe we have much further to go." The language in the FOMC statement and Powell's comments were a blow to investors who had been expecting rate cuts to begin as early as March. Since July of last year, the Federal Reserve benchmark overnight interest rate has remained within the 5.25% to 5.5% range. After the Federal Reserve interest rate decision was announced, US stock fell, the dollar also fell, and US Treasury yields also fell. The hope of the market for the Federal Reserve interest rate decision to boost confidence was dashed, and the only remaining short-term factor that could simulate stock gains might be the quarterly financial reports of companies. But there are many uncertainties in these regards. Therefore, the stock market is likely to continue its trend of volatile adjustment, and a smooth upward trend is unlikely in the short term. Okay, so that's all for our micro news and data. Okay, let's take a look at the next topic. Okay, we'll be touching on block trades. Okay, as we all know, okay, we are now in the more competitive stage of the asset management scale competition, which is the second part of our competition for the Asia Pacific headquarters. I have been telling everyone recently that our major project is about to launch. Well, yesterday our new major profit project, block trading, was officially launched and started trading yesterday. Many members and friends actively participated, and we had already made our first profit through block trading. Everyone has already earned more than 10% of profits. So, are you guys satisfied with the profits? I believe so. Okay, let's regards to block trading. After the previous meticulous preparation, yesterday we finally present this truly risk-free and high-yield profitable project to everyone. And we also conduct our first block trading yesterday. And those members who participated in trading all harvest decent profits. And of course, it's also crucial. Okay, it's a crucial stage for us, as everyone know that we are competing in the scale of asset management. Carrying out block trading is the fastest way to increase the scale of our asset management in India region. And at the same time, it is also an important way for everyone to achieve higher profits. Okay? Okay. Although block trading is known for its zero risk and high return, many of our Patron members are not familiar with it because they have never been exposed to this type of trading before. And I believe a lot of you guys using ordinary account also never encounter block trading. Sorry. So some friends still does not have a clear understanding on how to make purchases through our platform, which leads to some of our members missing out on the opportunity to make profit from block trading yesterday. Okay, so therefore, I will take this opportunity to explain step by step that is needed, okay, for everyone to go and do the trade. Okay, firstly, block trading in our asset management account is actually very simple and convenient. You just need to click on the block deals. Okay, once you on the app, okay, you can see this is a block deal, so you can click on it. So once you click on it, it will prompt to the next page. Okay, so once you click, it will prompt to the next block trading interface. Then the next step is to select the stock for block trading. Okay, you can see yesterday there's REITs over here. So we'll click on it and we'll enter the quantity you would like to purchase over here. Okay, so you click on REITs, okay, that is for yesterday, and you input the amount you would like to purchase over here. Then click on confirm to buy. Once you click on confirm to buy, it is completed. Okay, the purchase will be completed. Okay, friends, this is actually very easy. Okay, for those who are still confused, okay, you can try out on your phone, okay, on your own, or if you have any questions regarding to this, please feel free to drop a message to me or my assistant. Okay, we will actually guide you from there. I'll get my assistant to guide you from there. Okay, in addition, please note that the stock name and code for trading will only appear, okay, will only appear when we have obtained the block trading shares. Okay, I repeat myself. The stock name and code for trading will only appear when we obtain the block trading shares, okay, and are ready to conduct block trading. Okay, normally, if there is no shares, okay, or is not within the trading period, okay, you will not be able to see any stocks listed, meaning that you will not able to see anything over here. Okay, you will see blank. Nothing will be shown here on this page. Okay. The main reason for this is that the timing of obtaining the block shares is determined by the market. Okay, it's determined by the market, and it's not decided in advance which high quality stocks can be continuated. So I hope that everyone could understand to this point. Okay, let's move on to the next page. Okay, we have a basic understanding of what block trading is, and the vast majority of friends and members have participated in trading and make profits. So I believe that almost everyone has already experienced the zero free risk and high yield trading. And of course, in the last block trading process, there are also a few friends who miss the opportunity to trade due to the limitation of shares. Okay, the limitation of shares, which leads to a missed opportunity of profit making. Okay, however, there will be another opportunity. Okay, there will be another opportunity for block trading tomorrow. Okay, so dear friends and members, okay, please prepare in advance, okay, and trade it quickly once it's available. Okay, actually the world is both amazing and full of contradiction. Okay, although block trading has such a great profit advantage, but it is always shortage of share supplies. After the first trading transaction, we have friends who privately ask me, okay, they send me messages, okay, or even to my assistants, that can we so-called request for more shares for block trading. Okay, so friends, okay, and members, to be honest with everyone, I also would like to fight for more shares for everyone. Okay, but the reality is that the quality resources in the market are always limited. Okay, this is not as easy as everyone thinks. Okay, this is not that easy. Okay, but first of all, when we were trading UC limit stocks, I have already mentioned that the number of outstanding shares of any listed company in the market has a fixed quantity, and it is impossible for them to suddenly increase. Okay, there's no way that it will increase the shares. So in other words, resources are limited. Okay, and secondly, there are also other demanding, okay, there are also others, okay, others demanding for block trading shares in the market, and not solely just our group. This makes the shares even more scarce in the market. And thirdly, I have also mentioned to everyone that before conducting block trading, my team also need time to track, inspect, and do research on the target stocks. Okay, that will be traded. It's not just choosing any stock from the market to trade. It's different. Okay, this is more in depth, and time taken is also longer. We have to select the target stocks carefully and negotiate for the related shares. Okay, therefore, regarding the issue of block trading shares, I hope everyone can understand. However, my team and I will do our best. Okay, I will do my best. Okay, to try to negotiate for more shares for everyone and provide more profitable opportunities. Okay, all right. We will not discuss any more about this issue for today. Okay, let's move on to the technical learning segment. Okay, let's take a look at today's topic for classical tactics. Okay, trading techniques. Okay, friends, what I'm going to share today is very important. Okay, so please give me your full attention. Today I'm going to talk about 3-day candlestick strategy. Earlier, we shared some contents about practical candlestick chart techniques with everyone. Today, we will systematically study one strategy, which is candlestick chart. Okay, candlestick chart, as the most basic part of technical analysis, is well known to many investors because everyone every day will see candlestick chart. Okay, but in terms of its true meaning, do investors really understand the meaning represented by a single or multiple candlesticks? Okay, after understanding the basic knowledge of candlesticks today's explanation will be discussed on 3 candlesticks pattern. Okay, so let's hop on to the next slide. Okay, let's begin. Okay, with Morningstar pattern. Okay. For a single candlestick, we need to understand the most basic meaning of, as candlestick represents the language. Okay, candlestick represents the language of the market, especially the combination of multiple candlesticks. What does it mean? In addition to single candlesticks, there are many forms of multiple candlesticks combination. But today we'll focus on the related forms of three candle patterns. Okay, so now let's look at the first three candlestick combination pattern called the Morningstar. Okay, Morningstar. The Morningstar, also known as Dawn Star, Morningstar, or Star of Hope, and so on and so forth. There's a lot of names for it, okay, but normally we all call it Morningstar. It's a candlestick combination pattern composed of three candlesticks. The candlestick chart with the Morningstar generally appears at the end of a downtrend and is a relatively strong trend reversal signal. Okay, strong trend reversal signal. This form should be noted if it appears in a downtrend, as the trend has already issued a fairly clear reverse signal. When this candlestick combination pattern appear, it is often a very good buying opportunity. Okay, let's take a look at the next slide. Okay, 4 factors to consider when forming a Morningstar. The Morningstar is a strong reversal signal, but in its formation process, the following aspects need to be considered. Number 1, because the Morningstar is a bullish reversal pattern, there must be a downtrend. Why is this so? Because this pattern is first a bullish pattern, secondly a reverse pattern, because only after a downtrend reverse can it be bullish. So can everyone understand to this point? Okay, for point number 2, among these 3 candles, the first candle must be a bearish candle, and this candle must be longer. By being longer, it means that the range between the high and low points of this candle will be much greater than the recent average. Okay, for point number 3, the second candle should be indecisive, as the bulls and bears begin to reach a balance in trading. Okay, and it is best for the candlestick chart to close as a doji. Even if it is not a doji, the body of the candlestick should be very small. Okay, for point number 4, the third candle should be a very strong bullish candle, almost indicating an imminent reversal in the market. Okay, next, let's take a actual case of Morningstar. Okay, as shown in the chart, okay, after a period of decline, a Morningstar pattern appeared at the bottom, followed by a significant rise in stock prices. It is important to note that sometimes the star line or single candle in the pattern may not be as precise as in the textbook, because as I mentioned before, what's in the textbook is almost, you can't find it in the trading market. Okay, you do not have 2 identical charts. Okay, but as long as the pattern is clear, is sufficient. 2 points to note here. First, the morning star should appear after a period of market decline, meaning there's a decline. Okay, and the greater the magnitude and duration of the decline, the more accurate the signal represents. Secondly, if the morning star appeared accompanied by a corresponding increase in volume, okay, in trading volume, it means that the appearance of the morning star pattern is supported by significant increase in trading volume, which further validates the reliability of the outward reversal. Okay, over here. Okay, we have just gained a certain understanding of the morning star. So, what are the key applications of the morning star in practical trading? Okay, first point. The morning star combination is indeed a bullish pattern, but it is important to note that the strength of its reversal does not solely depends on whether the second candlestick, if it's a doji. Okay, if the second candlestick has a clear lower shadow, okay, a clear lower shadow, is even better. And the longer the lower shadow, the better it is. Okay. However, since this pattern is a clear reversal pattern, its occurrence in the real market is relatively rare. Therefore, to have a more standard and ideal pattern is even rarer. Sometimes we may also use some other methods to complement, such as candlestick pattern combinations and etc. Of course, this is different part of the content which we will not discuss today. Okay. For second point, the strength of the outward movement that this pattern can generate, or the strength representing the reversal, depends on whether the third bullish candle can open with a gap up and how large the gap up is. Okay. At the same time, we also need to observe how large the body of the third bullish candle is. So in short, how large is the outward movement? Okay, obviously, the larger the outward movement, the stronger the bullish power it represents. If the third candle of the bullish market cannot even recover half of the range of the first bearish candle, then the strength of the outward movement will obviously be weaker. Okay, for third point, in terms of type of candlestick movement, the third candlestick must be a bullish candle. If it's a bearish candle, then the candlestick combination pattern that appears will not be considered as a morning star. Okay, let's continue learning the application of morning star with actual chart examples. Okay, I will share some real life examples of morning star. Okay, personally, I always believe, okay, that when sharing this kind of technical skills with everyone, it is necessary to explain with graph as examples. Okay, if we don't share the graph, I believe some friends with poor foundation will definitely not able to understand. Okay, or they might feel lost. So from the current graph, it is not difficult to see that the stock has been rising very healthily over a period of time. I've already marked it on the graph. At this point, the stock price is basically climbing along a 45 angle, a 45 degree angle. Okay, the so-called 45 degree angle here is just a symbolic analogy. Okay, don't actually use a tool to measure it. It's just an example. Okay, because everyone habits of viewing graph is actually different. Okay, and the expression of each market are also different. So the same stock graph, when enlarged or reduced, will cause different angles. So same as reading chart, everyone need to be flexible. Okay, when you read charts, you need to be flexible. The stock continued to rise until the appearance of two large bearish candle. Okay, two large bearish candle shown in the graph, which is over here. Healthy rise all the way. Then two large bearish candles. The stock continued to rise until two large bearish candles, okay, which is on the graph. For relevant buyers, the appearance of these two bearish candles can be said to be a big bro. Okay, but finally, the Morningstar pattern appeared in the following trading days. Okay, so after this bearish candle, Morningstar appeared. You can see over here. Okay, take a close look at this chart. Okay, so what will be the consequences of the appearance of the Morningstar candlestick pattern? Okay, take a look at this candle, this chart, and move on. Let's move on. Okay, here we use another example. Here we can see the Morningstar formation, which is over here. Alright? In an environment on continual rise, two unprecedented sharp decline bearish candles have appeared, which is a significant blow. Okay, as I mentioned, okay, a significant blow to investors that are holding the stock in the market. Without strong bullish confidence and holding, it is possible to exit with a loss. If they don't feel comfortable, they actually will exit with a loss. Correct? Before the appearance of the Morningstar. Okay, furthermore, looking at the Morningstar formation itself, the length of the lower shadow of the doji star in the Morningstar is also significant. Okay, you can see the shadow, bottom shadow. Indicating a bottoming and rebound favor. Representing that even though there is a continued tendency of the bearish trend on that, the bullish side has also made effects, ultimately achieving a balance in the market. Okay. Finally, looking at the third candle. The third candle, after the closing of the second candle, the third day show a gap up. Okay, show a gap up and a significant upward trend, directly recovering all previous decline of the first bearish candlestick. At this point, the Morningstar formation is completed, followed by a very clear upward trend in the market. It seems that the Morningstar does indeed indicates a bullish attack. Additionally, I wonder if anyone, did anyone notice that this chart is actually the same trend of the previous stock? Okay, the previous slide is actually the same trend. Okay, if you guys notice. Okay, let's move on. Okay, let's continue to see another example. Okay, but for this example, is a failed Morningstar. Okay, in fact, this pattern is actually a failed Morningstar. Okay, it can be said that this pattern does not meet the prevalent definition of the morning star, specifically in the process of forming the morning star, which is the part that is over here. Okay, when they try to form the morning star, we can see that the third candlestick is basically a doji. Okay, and some friends may think that this combination is similar to a variant trend of the morning star. But from my point of view, this is simply not the case, because only a significant bullish candlestick on the third day can reflect the bullish intent. As mentioned earlier, this third candle must have a large outward movement and recover more than half of the previous bearish candle downward movement. Otherwise, the bullish intent cannot be reflected. Neither of these conditions is met in this pattern. So we can see that even after a pattern similar to the morning star appears, the price continue to decline. Okay, see, continue to decline. Overall, the morning star pattern is indeed a very strong bullish signal of reversal intent. However, it is important to note that in its combination pattern, if the second candle lacks of intent to rebound from the bottom, or if the third bullish candlestick has insufficient outward momentum, or if the third candlestick is not a bullish candle, then the bullish attack is problematic. Okay, there is a problem there. Okay, and investors must also remember this. Okay, let's move on. So, conclusion about morning star candlestick. So investors must keep this in mind. Okay, all investors must keep this in mind. So overall, the morning star pattern does indicate a strong bullish reversal sentiment, but it is important to note that in its combined form, if the second candle lacks of strong upward momentum after bottoming out, or the third bullish candle shows a weak gap up, okay, or if the third candle is not strong bullish candlestick, then the bullish momentum may be a questionable question. Okay, let's move on. Okay, I also picked another 3-day strategy to share with everyone, which is called sandwich candle. Okay, sandwich candlestick. Today, we'll learn another pattern called sandwich candlestick. The content of the sandwich candlesticks we are discussing today is different. Okay, it's different from the traditional concept of bullish or bearish sandwich. Okay, there is also similar something like this, but it's different. Okay, after years of practice, I believe that the traditional concept of bullish or bearish sandwich is losing its significance, and its representativeness and predictive role in the future market are gradually disappearing. Okay, that one, the traditional one, which I personally feel is not so effective anymore. Okay, so today, let's learn about this new content. Okay, first, let's take a look at what is sandwich candlestick. Okay, some of you may already know that a sandwich candlestick is a technical pattern in a candlestick chart, characterized by two bullish candles sandwiching a bearish candle. Okay, something like this. Okay, two bullish and one bearish in the center. Okay. Okay, after a prolonged decline, okay, we talk about definition. After a prolonged decline in the market, there is a period of consolidation or a period of consolidation after a bullish market. Okay, either a decline or bullish. Okay, signs of a higher bottom. At this point, there should be a kind of anticipation, suspecting that the price may break through the consolidation band at any time. The reality of the market is that due to the long-term decline or consolidation, people's minds are scattered and investors are accustomed to selling at the slightest rise, creating significant upward pressure. For the upward movement, after the end of the decline, the pressure comes from the trap position. Those people have the shares on hand. Okay, and for the consolidation during the upward movement, the pressure comes from bottom profit-taking position. Those people want to take the profit. Okay, in terms of sandwich candlestick pattern, when a volume bullish candle breaks through the platform, the single candles often show weak outward movement, forming a bearish candle with a high opening and low closing. Okay, or a candle with a relatively long upper shadow. Okay, upper shadow. Okay, for the third candle, continues to gather shares to push the price further out, sometimes even forming a bullish candle with a long upper shadow. The three candles form a pattern with the two bullish candles sandwiching a bearish candle. This is known as sandwich candlestick, which has an ability to rise upwards. Okay, let's use charts, okay, for case studies. Okay, everyone can take a look at this graph. The market went through a small rebound before starting a consolidating sideways. Pay attention to the part I have highlighted in yellow. After a first bullish candle appeared, the next day is followed by a bearish candle that most engulf the gains of the first day. At this point, many investors who bought the stocks in the previous period start to feel uneasy, thinking it's going to fall and will exit near the cost price or at a small loss. But after the opening on the third day, there is a direct rise, and at the close, there is another significant bullish candle, forming a sandwich candlestick. This is followed by a round of rebound and upward trend. It's important to note that we must wait for all three related candlestick charts to be completed, okay, before we can judge whether it is a sandwich candlestick. We should never judge the formation of a sandwich candlestick based on one or two candlesticks, because that is impossible. So when it comes to this formation, if it appears, it will appear. There's no need to judge whether the sandwich candlestick will appear based on one to two candlesticks. Okay, we will never know what is the third one. So wait for the third one to appear, then we do our judgment. Okay, the significance research of a sandwich candlestick pattern. When the sandwich candlestick pattern appears, the stock price may not necessarily increase, and subsequent trend is crucial. If the stock price shows a gap up or continues to rise with an increase of volume, it indicates the technical significance of the sandwich candlestick pattern, suggesting that the stock price will have room to rise in the future. If the stock price does not show a gap up or continue increase in volume, okay, i.e., if the upward momentum cannot be sustained, then the sandwich candlestick will become a bull trap. Okay, it will become a trap. And the stock price will fall back to its original consolidation range for continued sideways trading. Or even break downwards. Okay? Therefore, just seeing two bullish candlesticks, okay, salvaging a bearish candlestick does not necessarily means it is a bullish sandwich candlestick. Okay? Any market trend is the same. In any technical method in the stock market, there are successful cases and failed cases. And we are not focusing on this. The key is to continuously learn. Choose method with higher success rate or avoid the drawbacks and leverage the advantages of a method to improve one's own trading or judgment success rate. Take the sandwich candlestick as an example. It has both successful rising cases and cases where it fails to rise and instead fall. Okay. Next, let's take a look at the case of a failed sandwich candlestick. Okay, this is a failed sandwich candlestick. The area marked, okay, which is a yellow box, okay, but there are no subsequent upward trend, and it cannot sustain the rise. Instead of forming an upward momentum, this position become a bull trap. Okay, become a bull trap. Is there a way to avoid this situation? I can tell you that there is no foolproof method to avoid. But in actual trading environment, you can mitigate the unfavorable factors of this method by using appropriate profit and loss management. And try to make profits as the market or the stock price successful rise. Okay? Okay. The trading key points of sandwich candlestick pattern. Point number 1. When a bullish candle is sandwiched between two bearish candles, the larger body of a subsequent bullish candle, the better. If a doji candlestick is in the middle, it indicates a stronger upward momentum. Okay? Point number 2. The second bullish candle should stand above the moving average, which should be in a strong upward trend. Point number 3. Increased trading volume is a true signal. Okay? Increased volume. Even if the first two conditions are met and the uptrend is not guaranteed, it is also necessary to consider the expansion of trading volume, with the basic requirements being to exceed the previous trading volume by then at least 2 times, or even reach the highest daily trading volume in the recent period. Okay? Point number 4. When all the previous 3 conditions are met, it indicates a medium-term market scenario rather than a short-term one lasting just for a few days. Therefore, the expected increase should be at least 20 to 40%, and not to miss out on the opportunity for significant profits with a minor increase. Okay? Okay, friends, that's the end of my live sharing class for today. Hope that everyone are able to learn something new today. And thank you very much for joining my class and giving me your full support. We will continue our live class on this coming Sunday, 4th of February 2024 at 8 p.m. I hope to see everyone here again. Thank you once again and have a great night.